Welcome to today's webinar event. My name is Sean Kozak. I am the founder of NeuroStreet Trading Academy, and I want to welcome you to our weekly webinar event on automated ratio trading. Now, the topic is, it says trade like a musician, and the reason I thought that was kind of fitting for today's discussions was ultimately because number one is I'm a musician, and number two, ratio trading is a mathematical process. It's kind of like the musical notes of the market. And so today what we're going to do is we're going to hopefully help you learn how to play the market, right? And that's kind of the synergy. Before I go any further, what I like to do is I like to cover a couple groundkeeping rules first. First and foremost, we are recording the event, and we are going to be able to distribute that event recording after the event via email. So if you can't stay for the entire presentation, we understand. Rest assured, we'll give you all the details followed with any special offers or any of the recordings following the event. And if you have questions, please type them in the chat box. By all means, if I don't get to them right away, I will. If I don't see them, it's not that I'm ignoring you. I'm just presenting, and I'll definitely circle back and we'll get to them as soon as possible. Now, how many of you guys have ever heard of Fibonacci or harmonics or ratio pattern recognition? Just give me a yes if you've ever been exposed to it. If you're new to it, if you're not new to it, right? Just type a yes, new, or a or a no, or anything in that, just so I understand where you're at here as a trader. And if you could let me know if you're a stocks, futures, or Forex trader, a day trader or a swing trader, whatever the case may be, just let me know where you're at as a participant. I just like to kind of feel out the audience and kind of know who's here, because we do a lot of events and we do cover a lot of stuff. So I just want to get to know you guys and open up the dialogue a bit. So as we go through the presentation, I need to cover a quick disclaimer. And it's really important to know the risks in the business. We're not here to advise you. We are an academy with a software development arm. And we ultimately put on these events every week to educate and to teach our trading concepts and our indicators and our methodologies and stuff. So, that's it's very important to know that. So we're not here to advise, and we cannot guarantee future results, but we all know that, but it is required by law that I put that in here. So a couple things I want to do here is I want to talk about the overview of frequencies. I want to talk about the global scanners that we've built. The reason we use scanners for this type of a strategy or this type of trading concept is because we need to go and find the opportunities, right? You don't just sit there and let's hope that the market gives me a pattern today. Or if you're a day trader or a swing trader, you don't just sit there and watch the screen. You use the scanners to leverage the heavy lifting so that you don't have to sit there and go crazy looking at the market going up and down, right? We're going to look at multi-time frame application, and we're going to go into the math-based automation of what this is for continuation and reversal ratios. We're going to talk about the difference between confirmed setups and potential trades. Potential trades are what we're scanning for. Confirmed setups are actually in play, or they've happened. And we've got the trading plans are all mapped out for you so that you can identify these trade locations before that you take the trades. Now I'm going to go over some live demonstration on some setups today, and we're going to talk about how to increase the odds of the patterns. I think it's really important that if you're going to trade a methodology, that you have a way to increase the efficiency of those things before you just jump in and take any trade. There's always things that we can do to add probabilities to every type of trades. And at the end of the event, if you like what we've done here and you're interested in the concepts and you'd like to take advantage of using these tool sets, we have a promotion on the software, and we'll definitely get you all those details towards the end of the event. Okay. So for those of you that have never been to an event with me before, my name is Sean. I'm a trader just like you, right? I've been through the trenches, ups and downs. I've traded into big run-ups. I've traded into drawdowns. I've traded out of drawdowns. I've traded sim accounts, live accounts. I've traded managed accounts. I've done it all, guys, but I've built a really big school, and we have a huge development arm to be able to provide products and services to the community of financial traders. It's my passion. My biggest goal is to help you guys succeed. And I think that's why I've become a better trader, is because I've always spent time working and helping traders, right? And I just love it. So, you know, if you sense the passion in my voice, it's because it's what I live by. I've been looking at charts for over a decade. I went to school in finance. It's just what I do, right? And it's everything about how I live my life. I love the markets, right? And so if you have questions for me, or if you have questions for my staff, or even our customers at that best, if you want to get in touch with us, we have an open door policy here. We're an email or a phone call away, guys. Okay. We understand the struggle of the financial markets. It is a 10% threshold of success. So we're sitting here making sure that we can help all of the rest of you try to get to that 10%, right? So let's talk a little bit about why I wanted to put this event on. The number one problem with drawing patterns is that you're not knowing how to draw your ratios. And there's a little typo there. It says not knowing, K-N-O-T. Not knowing how to draw your ratios, right? Please, God, help me now. How many of you guys have ever marked up your charts and you've got trend lines and channels and you've got levels of interest and you're trying to figure out whether you're in a wave count or which ratio is pulling it back and what Fibonacci level? Like, how many of you guys have ever felt like that before? You may not be to this extreme, but this is kind of to bring some humor to the event and to kind of, you know, but give me a yes if you feel like sometimes you get analysis paralysis, right? And you're trying to simplify technical analysis down to the areas that really, really matter, okay? I can relate to this. I'm saying this from my own experience. Is sometimes when we're drawing levels or we're drawing pullbacks or we're drawing Fibonacci ratios or we're doing anything of the sort, you know, it's important that you learn how to do things in a clean way so that it doesn't make very difficult trading decisions, right? It doesn't make it hard for us to make decisions, right? So one of the things that we do is we scan the market. Now, the reason we scan the market is so that we can ultimately identify the time frame that is in play and the ratio that is in play. You notice how, like, we're not drawing on our charts here. We don't have to worry about drawing any levels. It's all done automatically for you. Like, the purpose of this tool set is to be able to give you not only the scanners, but to also help automate the chart drawing so that you can locate the patterns that are in play on the markets that you're trading, on the time frames that you're trading them on. It's a very powerful combination, because whether you're trading stocks, futures, or Forex, or whether you're trading a scalping time frame or a swing trading time frame, you can literally set up the scanners, and we've built a workspace for you. We've built a workspace for day traders and a workspace for swing traders, and then you can take those and you can add upon those, right? And what I want to do today is I want to talk about what these patterns are, what these ratios are, because this is not subjective analysis. This is 100% mathematical fractal analysis based off Fibonacci, and that's exactly what this is. So we're going to go in and take a look at what math-based automation is. And we're going to answer the question as to what is automated ratio recognition. Well, automated ratio recognition, that's a tongueful, is where we automate Fibonacci ratios. Now, some of you may know them as harmonics, right? There's a lot of vendors out there that use the terms harmonic patterns. Harmonic ratios and stuff, they're just Fibonacci's. And I like to look at the math behind things, and I like to look at what it is. Like I'm a statistics guy, so I just call it as it is. It's Fibonacci math. It's ratios based off Fibonacci retracements and extensions. Harmonics is a name. It's a branded name, right? It's a term that's used by other people to market software. So when we look at this, it's ultimately, you know, let's call it as it is. We're looking at math in the market, okay? And when we go into this, ultimately, when we go into this, we want to know where are the continuation ratios and where are the reversal ratios, and what are the automated plans based on, right? Like, where's the entry, where's the targets, where's the stop losses, and can we adjust those plans a bit? Can we fine tune our entries a bit? But there's two categories: continuation ratios and reversal ratios. And inside of those patterns or those categories, you have M ratios or W ratios, which ultimately are designed specifically for each ratio. Now, I think if I say the word ratio one more time, my head's going to spin off my neck. But the point of this discussion is it's absolutely next to impossible to do this manually. Like when I look to build solutions as a software architect, and we build them with our development team for trading and for traders, we look at solving problems in the market. There's, you know, if you want to draw a trend line, be my guest. There is no way in heck you are scanning multiple time frame analysis, multiple market analysis, looking for this information. And so the first thing I want to do is I want to talk about continuation ratios. These are all variations of Fibonacci retracements and extensions using ABCD recognition, which means when we're looking at this, you're going to either have a run, an extension, a pullback, a measured move, and these are all variations of width and depth of Fibonacci. Now, to me, if I wanted to try to find this, I would need to figure, okay, which swing am I using? How far is my mathematical measurement going? Am I doing it right? Is this actually a ratio, or is this me just being a trader trying to figure this out? Right? These are all the questions that we go through as traders, and this is the problem with the subjectivity behind drawing the technical analysis, is that it's actually next to impossible to try to draw all of this with accuracy and to be able to scan for it at best. So what we do is we do this for continuation ratios, and we do this for reversal ratios. And so there's actually 8 different patterns, right? 4 of each subsection. And the only difference between them is the only difference is technically the way in which we look at whether or not they're breaking structure or they're not breaking structure. Are they in a continuation environment or reversal environment? But if you're like me, when I started first looking at this, and I'm like, okay, so you tell me I got all these different M patterns and W patterns and ratio patterns and continuations and reversals. How do I actually learn how to trade this? Right? Can we agree that that's a fair question? That's probably the most important question. Okay, looks really fancy, nice and shiny, you know, shiny objects, right? But if you're like me, or if you're like half of all of the traders that we talk to, it's not just about buying software and that just sits in the toolbox. It's like, how do I actually go ahead and make use of this? Can we agree that that's a fair question? Give me a yes if that makes sense to you. Gary says yes. Gary's the only one. Help me out, traders. Are you guys sleeping? You guys there? I just want to know where you're at, right? Because a lot of traders, I ask these questions because a lot of traders don't think like this. They just go and they start trading, they lose money. And I actually think that it's really important to kind of strip down the basics and understand the framework to, okay, how do I make use of this information? So the first thing that I do in this process is I want to set up my scanners to find the opportunities. So instead of you just saying, well, I only trade one market, or I only do this, I only do that. Why don't we look at this from an objective perspective as like, let the software do the heavy lifting and go and find you the opportunities. And then you can define the time frame that you want to trade them on. So I've got scanners for day trading charts up to a 5-minute, and then I've got swing trading like 30, 60, 240, and etc. And then what I like to do is I like to go in and define the direction. Am I looking to buy or am I looking to sell? And does that ratio meet my criteria for the trend of the market? Okay. And that way I can move into assessing the probability of the trade. Like I can actually move into trade management. So before we do anything, we're going to scan for the trades. We're going to look over the time frames. We're going to look over the markets. We're going to say, okay, where do I want to focus my attention? Okay. Then we do is we go into the ratio and we identify the pattern. Let the software tell you what it is. Okay, this is a bullish continuation pattern. This is a bearish ratio pattern. We identify, is it a continuation or a reversal? And we decide, are we going to take the trade bullish or bearish or not? It's that simple. Okay, it's really that simple. And then what we do is we map out the trading plan. Now we automate the trading plan because it's all math based. That's what's really important. It's not subjective. It's mathematically mapped out based off the ratio itself. So the stop, the entry, and the targets are all part of the mathematical breakdown, which means every ratio is going to have its own automated plan. You're not going to have the same size stop or targets for every ratio because every ratio involves different mathematical measurements in the market. And it's kind of like market geometry with Fibonacci is what it is. Okay. So, 1 + 1 is 2, right? There's no confusion on that. The same thing with these is that the entry, the stop, and the target is always going to be determined. Is the entry a limiter? You can enter limit or market whatever you choose. How you choose to enter a trade is really your choice. Okay. So when we look at this example, this is an example of a ratio pattern, a buy ratio pattern that gave the ABC correction into the projected D. And the projected D, I'll just show you this. Okay. So the anchor starts here. It measures to A, it corrects to B, it measures to C, it extends to D, and that is the entry. Now, inside of this area, there's a whole, what we call a buffer zone. Like this, the market could trade into this area at any given time. It could overshoot it a bit. Sometimes it just comes down close to it and it reacts right out of it. Like, we don't know how the market's going to respond. This is mathematics. We're measuring mathematics. We're not measuring accuracy to like, I need to time the market to the tick every single time. It's all about areas of interest, right? Let's take a look at another example. This is an example of a short, right? This came right down. This came ABCD correction, right? This is a continuation ratio. This is another example of a ratio long, right? This one came right down to projected D, reacted strongly. I have reasons to enhance those. Like, I'll explain why some patterns really, really work well and why some of them are a little bit less probable, right? And I'll teach you how to do that, real basic stuff, okay? And then take a look here. If we look at this ratio example, this is an example of, this really, really deep extension, and then it came back up. You can see it blew through the area a little bit, came back, and then it gave a retest before dropping down and hitting the targets. Right, here's another example. You can see they're all different ratios. Like, they're literally, the software is looking for different patterns of runs and retracements. This one came down. This is a directional trade. I like these. I like these directional trades because these are reversal ratios in the direction of the trade. These are actually one of my favorite ones. If you're a trend trader, if you see these ratios, these are very powerful trades. Like, they don't happen a lot, but when they do, it's like load up. These ones here are like one of my favorite because they're always with the structure. Okay. Same thing here. This is a short trade. This is one of my favorites because you're going with the structure. You get the retracement back up to projected D, and this is a zigzag ratio pattern. Okay. Now, these are just different examples. I just want to show you how the software shows you the pattern, and the plan is there for you. It's all done in advance. But what I like to do in these events is I kind of like to leave you here with an action plan. An action plan is kind of like, if I'm going to take this indicator and go and use it to help my trading success, what are my steps? Well, I want you to take a screenshot of this. And my job today is step 4. Like, realistically, if I'm really going to give you benefit and add value to your business and help you become a better trader, I want to increase the odds of your success. Not just give you a tool to use, but I want to show you how to increase the potential of those trades even working better than just using the software by itself. Because remember, we build it and we use it and we teach with it, and we've got lots of traders using it. So how can we add value in terms of, hey, we see these working really well, but you should also do this, it's going to work better. Right. And so one of the things I want to do is I want to talk about how to reduce the entry a bit, reduce the risk on the entry so that you can shave risk off if you can. I think there's a ratio happening on the YM right now. I have to see how it played out. Another thing I want to do is I want to talk about whether the ratio is in the direction of the higher time frame trend. And then I also want to talk about waiting for confirmation at an entry point. Like, instead of just fading the market at the level, do you have anything like a price break? And I want to teach you what a price break is. So let me kind of show you some examples. This is a trade I took a while back in the trading room. I took this trade because it was lining up with a directional trend trade, and it was a really, really clean area, right? And you can see this is a directional trade. I took this trade with all of my students in the classroom a while back. And here's another trade. This was a different trade on the S&P. right? I took this trade, okay, teaching in the class, and you know, these were trades that I took. This was another trade here, but this was a student. Gary sent me a picture of his trade. This is one of his trades, and you can see, you know, he's trading one contract down at the lows there. His entry and his stop, or his target was up there, and you know, this is just an example of some of the students using the software and what they're doing with it. This is on a 2-minute chart, right? He's scalping ratios on a 2-minute. Right. This is another, Terry took this trade, and, you know, he's using other indicators. You can see there's other signal software there, and he's got other stuff on there, but he applies the ratios on his chart. Right. And so you can see this is another example of a trade that he took. Terry took the trade off the lows. Right. And so this is interesting. It's just, you know, traders send this stuff in because they're using it with success. Right. So I just wanted to share with you some examples, but now what I think is best is we go in and we actually do it together. Right. You know, you guys with me? Does everybody understand it? Give me a yes that everybody's up to par with what I've talked about, and there's no confusion, and everything made sense to you guys so far. It's always good to check in and make sure, because these presentations sometimes, you know, I often get told, you know, Sean, you're at like a PhD level. What about us new guys here? Sonny, you're asking the wrong questions. That's a very, Sonny says a question. I'm gonna read it out here because I'm gonna explain it. Sonny says, what's the win rate? The win rate for who? Right? Everybody trades different markets on different time frames. This is not a system. This is a tool that is designed to be universally different, because if you trade it as a day trader, your win rate would be completely different than a swing trader. Or if you're trading it on stocks or futures, I wouldn't even know, because if, let's say, someone's trading it on Forex, right? So that's not the right question to ask. The question is, if you're going to trade it on the right time frame, you need to trade it in sim and build a track record for you, because you're you, right? That's the point, right? And you might be a non-directional trader versus someone else who's a directional trader is completely different. But it's a good question. It's a great question. Right. And I think that's why I like to call you out on that, because I just want to make sure that traders, because it's often I ask those questions too, right? And it's really valuable. So let's go in here and talk a little bit about what we're seeing here. So let's go in here and do this. And let's bring this down. So what I've got here is I've got a workspace. This is my day trading workspace, and this comes with the software. So if you're using the tool set, you'll have this pre-built. I've got a scanner up here for futures. I've got a scanner for Forex, and I've got a scanner for some of the main ETFs. Whether you trade stocks, futures, or Forex, whatever it is, you pick your poison, right? And the big thing though is you know, first step. What's step one here? And I'll show you. I've got another workspace. We're going to take a look at the swing one here as well. I've got a swing trading one here, and you know, there's a few different works. There's actually a few on the YM. And this is on the 30-minute. Right, but there's actually trades here on the 60-minute and the 120. We'll go and take a look at. Right, so we'll take a look at these in a second. The big thing here is what's interesting is that this is a swing trade. Okay, this is a swing trade chart, 30-minute, but at the exact same time, there's a 5-minute short ratio happening right there on the same market. You're like, how does that work? Because every fractal has different math inside of it. Every run and retracement is different. It's all about you as the individual. So the first thing I want to do is let's talk day trading for a second. Okay. And I just want to kind of like, I've got ratios here on futures and I've got some on Forex. We don't just go and look at whatever market. We go and look at what's in play. Like, let's go take a look at these NASDAQ charts for a second, right? So let's take a look at this one here. This is a great example. This is a brand new NASDAQ environment, okay? We're going into a potential trade right now on the NASDAQ. Now, all the new guys in here would say, oh, let's take it. Let's short it. The software says to short it. Wait a second. Wait a second, right? I can also look at it on a 4-minute. I could look at it on a 3-minute because I'm getting the same pattern is happening across 3 fractals. Okay, so you can pick whatever time frame you want to assess it on. I'm just using the 5-minute as an example. And what I like to do here is I like to say, okay, well, first of all, what's the direction of this market? Just real simply at a glance. What is the direction of this market? Like, pretty much the downtrend, but we've kind of transitioned, right? Like if you look, the trend is kind of at the bend in the end. Yes, we're making higher highs and higher lows, and we're pushing strength. So yes, it's a short ratio, but it's also showing some bullish strength. So this would become, even though it's a reversal ratio, because it's the way the pattern, you're still going counter trend on the market. So one of the things you got to expect with counter trend environments is, hey, wait a second, I could expect maybe this market could take some heat here. There's more likely we're going to see a push into this area a bit. And you notice how there's this great green box that's kind of lined out? That's what we call the buffer zone. The buffer zone is the area in which this pattern becomes valid in projected D. So technically, my entire area to plan this short starts here all the way up to here. I don't need to get into the market just yet. I got time to make a decision. That's the key here, is our software shows you that there's an area of interest to pay attention to right now, because at this location, this is a very deep retracement for this math in the market. And therefore, after deep, deep retracements like this, a lot of times there's corrections, which is the point of this ratio. And so what I normally do is, if I'm with trend, I'll be more aggressive, but I'm against trend right now. So, you know, take a look at the YM. The YM's no longer there anymore. Yeah, the buffer zone is all mathematically based off the ratio, because it's all dependent on the size of the legs. It's all dependent on the extensions. It all has to do with the math. Every ratio is completely unique to itself, right? So let me kind of explain something. When we go back into this checklist here, and I talked about this odds enhancers. The first thing I want to do here is, I've identified the scan. I've identified the pattern and the bias. It's counter trend. It's a reversal trade, but it's still counter trend, which means it's probably a good idea that I could try to increase the odds of the trade a little bit better. Because if I'm going against the market, there's always risk fading a market. It's a little harder to make money fading against the structure. So one of the things that I like to do, and this is just me sharing experience with you to add probability to this. You may use other profile software. You may even own some of ours. We have some pretty top level profiling software. But even if you're not using ours and you just want to keep it super, super simple, right? Without having to spend other money on other indicators, and you just want to take advantage of this, what I would encourage you to do is just go into, say, Ninja's draw tooling section if you're on this platform, and you just go into the order flow tool set. Actually right here, order flow volume profile. Just take the volume profile. And I would literally just take, oh, I'm on the wrong license. Give me a second here. I'm using the Top Step platform, that's why. Okay, so what I'm going to do is I'm going to grab one of our indicators, and I'm going to show you how to do this. Okay, I'm going to, you could use Ninja's platform, but give me an example here. Let me go. I'm going to add one of our profiling tools, just because I haven't updated my license keys on the platform yet. So let me just go in here and just go to duplicate NASDAQ. I'm on a 5-minute chart. I'll show you guys an example here. So I'm just going to go here. That's the example, right? And one of the things that I like to do is I'm just going to add an indicator on here to show you profiles. Okay. Bear with me here. We're going to go in here, and we're going to go into this. So I'm going to just show you an example of what this is, and we're going to give it a second here to load. I appreciate your patience, guys. I forgot that I didn't have the just loading, and the NASDAQ's got a lot of tick data, so it's going to take a little time for me to load this, but we'll give it a second. Because I want to really show you how to take this and really run with it as somebody that can really take advantage of this, because I think it's going to add a lot of value. There we go. So what we're going to do here is, and this is because I've got a ton of data on here, so it's loading a ton of data, but let's just I'm going to take a profile setting, and I'm going to just draw a manual profile here. This manual profile, let's just say from the high to the low here. Okay, I just take a volume profile. Okay, and the issue I see here, this is very, very important that you understand this, that if you're gonna take a trade, you need to understand what's happening in the market, right? Like if I'm gonna go and take a mathematically based ratio trade on a 5-minute chart as a day trade, I want to know, like, what's the volume going on here? Like, what's going on in the volume right now? And I can see right now that there's really, really high volume nodes, okay, right up here. You see that? Okay. And right here is a very low volume pocket. So what happens in low volume nodes is the market trades through them fairly quickly, going to high volume, because this is where the market wants to trade for liquidity based off institutions. Okay. And so what we do in these regards is I would draw a little line in the sand and I would map out where the high volume nodes start to pick up. Okay. So if we look at this, I would literally just draw a little line here. High volume start to picking up there. And where it really starts picking up is right up about here. So instead of me just getting in right here at that buffer zone, I also know that the biggest point of volume is here to here. So instead of me just getting into the market, no, that you could use, that's what I was trying to do, HH. I just didn't update my license key because I'm using a comp license here. So I have to update it as a vendor, right? So I had to add my own indicator, but the point of the matter is that this is what I'm referring to. I'm using a profile. You could go into Ninja and use this order flow volume profile, okay? If you have a multi-broker license or using an order flow, right? But now I can take this ratio and I know that based off this entire buffer zone, that the projected D is technically happening at the volume. Like that's the volume levels, right? Inside the profile. So the whole point of this is I'm now reducing the risk of this buffer zone down to projected D. And my stop loss is projected here. Now, one of the things that I like to do, and this is just me, just so I can help you understand how to really increase the probability of these trades, because they become really big trades when you understand what's going on in the market with it. If I go in here to this chart and I look at the volume, where does the volume stop? Like the high volume. The high volume kind of tapers down in here a bit, right? It goes big, big, big. Well, if I'm able to have a stop loss here, but I know that the low volume doesn't start to here, I would actually probably want to make sure that my stop is a little bit up here. Now this works on any time frame. You could do this on a 1 minute or a 2 minute or a 60 minute. It's about understanding what the market's likely to do at this ratio, because the market's producing a mathematical ratio, and now we're able to go in and use, say, volume profile to help us reduce the risk. So I would draw a little line for myself and I would say, okay, self, the volume tapers off here. So if I know that, then I'm going to try to reduce my risk profile to here instead, which means I'm going to wait for the market to get back up a little deeper into this ratio, and I'm going to look to try to start building my position here. Does that make sense to you guys? Because I'm counter trend trading. This would be a counter trend trade, which means if you're going to take that reversal, I've now used volume to reduce my stop size, add probability to the location, and understand what's likely to happen in this area. Does that make sense? I've done my job as a trader by reducing risk, and I'm letting software tell me that this is an ideal place for me to do that. Make sense? Okay, I'm going to go over here, and I'm going to take this off now because I've got way too many days on my chart. I only need like 5 days of data. Okay. Now let's go and do this on a different market. Let's go in, like that trade is planned out. Like that's the next short. right there. Like when the market gets up to that area, we can plan to short that. Okay, so let's go and plan a different market. This is the next trade on the NQ. The gold trade has one on the 1 and the 2 minute. Let's go take a look at gold. Okay, and we're going to go here. We're going to change this to a 2 minute. Okay, it's a scalping time frame. We'll go over here to gold. We're going to change this to GC. It's going to take some time to load that data. We're going to go down to a 2 minute chart. Just loading down a little bit deeper. I could actually apply this to the same chart. I'm just using this as an example for order flowing, just to show you the volume at the areas, and we're going to go and assess the ratio. So we'll give it a second here, and this normally wouldn't take that long to load, but I have to update my license. So let's take a look at this. First and foremost, I'm getting a pattern on a 2 minute chart, which is a very noisy time frame, and these are very, very fast patterns, scalping, and they can often be, if you're not on the right side of the market, I personally would not trade this trade. And I'll tell you why, because I don't like to short very small ratios. This is a very small ratio against the trend. I don't do that. That's me. Not into that. That to me is a very aggressive trade. Doesn't mean it won't work. Doesn't mean that this will not come up and hit this projected D and come down and get that target. I just, for me personally, don't like trading these against the trend on, let's say, smaller time frames. Okay. What I'm going to do is I'm going to delete this chart for a second, and I'm just going to add it on this so we can actually just do it directly on the same chart, and that'll be easier for us to do so. So I'm just going to add the volume on here so we can go and look at volume, because if I was to take this trade and I was to take this trade on here and actually try to assess this information for this small scalp here, what I would do is I would need to understand the volume in this location. And in order for me to do that, let's see how many days I got going on here. Yeah, Erwin says Erwin says the SDV is a good tool for that. Yes, it is. Absolutely. So I'm just loading data here. Does everybody understand why I'm showing you how to increase the risk or decrease the risk? Does everybody understand why that's important? Exactly. It's very important, because just because we get an opportunity doesn't mean we're supposed to act on that right away. We need to kind of think a little bit and kind of go into the details. Let's take a look at a different market. Let's go into, let's say, let's go in here and take a look at, say, a Forex market, right? We could plan this short here on gold. It's the next trade. Let's take a look at the volume in this location. What I would do is I would need to kind of look at where we're at. So if I'm looking at my ratio being right here, what I normally want to do is I want to take volume from the high to the low and just kind of see what's going on in here, like what's going on from the volume side of things, because that way it allows me to be able to take, look at volume details. Okay, and just do that, right? And I can actually see that, where is the volume here? Where is the high volume nodes where the institutions want to drive the business? Well, it's right here. Like there's really, really high volume right up here at like 1913. So if I draw a little line right here at that node, and where does the volume taper off at the top? Right here. So what I would actually do here, I actually wouldn't short it coming into that. I would actually wait for this market to trade up into this, and I would put my stop here instead of here. I would actually take my entry here, let the ratio pull in deeper, and then I'm using volume to help that position become better. And that's how I think that this can be really, really beneficial. No, Richard, the trend of the NASDAQ is up. It changed at the bottom. Yeah. So, but I don't trade the 2-minute charts on these. It's too noisy for me. It's too much zigzags, too much whippiness. I want to go and take a look at a Forex pair. Let's go. Anybody here trade Forex? Give me a yes if you trade Forex. A lot of traders trade Forex. Give me a yes if you trade in Forex in here. Okay. And just good to know that. Or you're looking at it or you're understanding that. So let's go ahead and take a look at the Aussie dollar on a 5-minute. Okay, so I'm going to take a look at the Aussie dollar. So let's go in here to the 5-minute chart, and then we'll go in here and take a look at the Aussie dollar. Anybody else trading Forex in here? Barry's trading Forex. Take a look at the Aussie dollar. Interesting. So if we look at the Aussie dollar, this is the reason I'm looking at the Aussie dollar is because the software tells me to do it. I don't need to go and look at the euro dollar. There's nothing happening on it right now. There's nothing happening on the euro dollar right now. There's nothing happening on the dollar yen right now. Nothing. So there's no need to look at those markets. But there is something happening on the Aussie dollar. And what's interesting right now is this is also a counter-directional market. James is trading Forex too. Okay. The reason I say this is counter-direction, it's not macro counter-direction, it's current counter-direction, meaning we're putting in higher highs and higher lows in the market. A lot of traders get confused by looking past and saying, okay, this trend is down. Okay, yes, that trend was down. But what about looking this? What is the trend now? Trend is up. So if I'm getting a ratio to short, then we need to understand that we're going against the market. And so if I'm going to go against the market, okay, basically it could be a correction. It could be a correction into this, yes. But it's the point of the matter is that you need to understand, like, if you're going to take a ratio short here, okay, then how do we do that? Well, what we do is we go in here and we assess the volume. And I would take the volume from this leg to this leg. I would take the last structure high down to this bottom. And I would just, and you could use any volume indicator you're using. I would take this high down to this low. Not a lot of volume in there, right? There's not, and there's not a lot of volume in this environment here. I would take it, let's do this. I have it on very, very thin volume because it's Forex. And it's very thin volume in here. I have it set to 5-minute volume. It's very, very thin. So I would actually look at this being volume up here at the highs. Not a lot of volume in here. It's very thin volume. I personally would be a little reluctant to want to trade that. I can't assess the data on that. I can't assess the data quickly on that. Okay, let's take a look at a different market. Let's go down here and take a look at the pound dollar, or we could look at, the thing of the matter is here, guys, it's not about any specific example. It's about the process of being able to go in and actually sort through the information. If we go up here to the YM, let's go take a look at the YM for a second. The YM, it came through and then it hit the stop. Okay, it came down, it gave us, but it's a counter directional trade. So if I'm going to take a look at this, and I'm going to actually take this entry. This just happened on the YM right here, okay? So if I was going to take this short on the YM, I want to say, okay, wait a sec, where's the volume? Okay. Okay, well, wait a second here. Wait a second. Let's go into this data. Where was the actual best place to take the entry in this projected D to the projected stop? I would say arguably right here. If we were to take it right here instead. So instead of taking that there down at the projected D, yeah, exactly. You're going counter trend. You're going higher highs and higher lows. So you're fading the market, which is very, very aggressive, right? Which is one of the reasons why when you get a ratio, assess the direction, reduce the risk. Because if we're looking at it from this perspective, okay, you see how we came up into this? We came up into this area here, and we hit that volume node very closely. Volume is the thing for me is if I'm going to enter here, where's my stop? My stop's got to go above this volume node because I'm reducing my risk by 0.5%. So that means I can move my stop a little bit higher. And it's all about moving the trading plan slightly up a bit by using volume to enhance the decisions. So instead of me taking the trade here to here, I can do it from here to here, right? And I can wait for this market to transition. Now I always want to have my market. See, watch what's happening. They're going to start selling this off here because this is a volume-based environment, which means you need to have your stop above the volume. The math will kick in eventually as long as you understand the volume at the math. What they're doing is they're just coming up to tag the top end of this node, which is why this math is not wrong. It's just that we need to be paying attention to the volume of the market. Look what they're doing. They're selling it off at this ratio. They just overshot it a bit. The reason they overshoot it is because they're going in to test the volume. So I really think volume can enhance any strategy, but I really think that when you understand this, the purpose of using it with ratio trading, the ratio trading is going to tell you where the market's likely to do specific things based off mathematics, and then you can come in and you can reduce the risk using volume analysis. Now, if you're not using our volume tools, that's no problem. You can actually use the standard stuff that's inside of Ninja as long as you're using Ninja's platform, or if you're using other volume profile tools, you can. But I'm just thinking that that's a really good way for you to increase the probability. Now let's go here and take a look at the swing trade stuff for a second. Let's go look at these markets, right? So if I'm looking at the NASDAQ on the 240, let's go here, take a look at the NASDAQ on the 240 chart. NASDAQ here, give it a sec to load. Okay, I'm just going to close the day trading one out. Okay, and let's give it here a little bit. I need to add more days. There. So look at the NASDAQ short. This is a huge swing trade, like huge. Our software will pick it up as soon as we start projecting this D. Look at this trade. Massive short. And you ask yourself the question, excuse me, what's the direction of this market? Clearly up. You're clearly in an uptrend. But what we would do in these situations, I would do personally, is I would need to go in and assess the volume. And almost always you're going to have volume at the highs of the market because the market has to stop with volume. Market can't go up unless sell volume steps in. So I would assume that there's some nodes in here, right? And they're just coming up to test the volume in that environment. So this is why I think this is a really clean area. And you know, if you're a swing trader, look at this is a huge trade on the NASDAQ. Came right up into projected D, right into the area, and it's on its way. Okay, let's go take a look at the Aussie dollar on the 240. The Aussie dollar's got a 240 long here. Look at this. Huge trades. These are really big trades, guys. The Aussie dollar came right into projected D, hit multiple targets, came back, came in for a second ratio, and there it is. How do I calculate the targets? By mathematics, Richard. It's the measurement of the math, right? So we measure the extensions, and then we project based off how deep this trade has to pull back before it can overshoot or overvalue, right? It's all to do with math. It's all automatic in the back end. Yeah, now you can set them manually. We have the option for you to come in and actually go in and actually set these manually. You can go to trading plan 2, turn trading plan 1 off and trading plan 2, right? And then basically you can adjust these yourself. These are all manually adjusted. Hey Prince, how you doing, brother? So like, let's take a look at the Aussie dollar. Like this was a huge trade on the Aussie dollar. Look at this. right down to projected D, came back for a second retest all the way back up to target, all the way back down there. These are swing trades, right? So you definitely want to be holding for bigger risk reward ratios. You know, it's not about perfection, but it is about making sure you trade for R multiples, understanding that. Let's take a look at the pound dollar on the 240. Huge trades. Pound dollar on the 240. Now this is swing trading. If you want to swing trade stocks or yeah, you could measure selling pressure or buying pressure, or you could use other tools to help increase the efficiency of it. I'm just telling you that mathematically, the reason why these ratios work a lot is because there's a lot of people looking at them. It's kind of like a self-fulfilling prophecy. Okay, price came all the way up into the 240, ripped into that, came back, retested, and they're on their way down. This is counter trend still. It's counter direction. Let's take a look at the dollar CAD. This one didn't hold. Now we say that you did miss the day trading one. We looked at the NASDAQ and we looked at a few of the other ones. Yeah, but you can definitely catch the recording prints. We just looked at how to increase the probability by using volume on the stops and using profiles to kind of reduce the risk on volume trades. But let's say you want to look at this market and you know from a bird's eye view, okay, from a glance here. Basically, you can see that there's the entry, right? And you say there's a stop. You say, yeah, but why did it rotate? Because wait a second. You can take volume and you can actually go in here and take a profile from, say, here to here, right? And I would almost guarantee that there is a volume node sitting right here, and this is a low volume node. So instead of entering right in here, we would actually enter down here and move our stop loss down here because we're using volume to enhance that. And I just discussed that in a moment ago. Let's go take a look at the stocks. Let's go take a look at, you know, oil. This might need more data. Yeah, I don't have enough data for that. Let's take a look at gold. Yeah, I don't have enough data on the stocks right now. I got a little bit more data. So I'm going to leave stocks alone for a second. So I don't have the data set up for that yet. That's a great example. So this is the most recent trade in play right now on the 240 minute. And these are just swing trades. Right, and if I want to go to a different market, let's go take a look at the dollar Swiss franc on the 120. Let's go to the 120 minute. And this is the fun part. You don't even have to. This one already came in and hit very close to target. This came right down, hit almost T1, and then it dropped down again. So that's the long there. That's done. Okay, let's go take a look at the pound dollar. Look at that trade. And the reason I'm surprised, guys, like the reason I sound surprised is because I don't swing trade Forex. So when I just pull the software up, it's kind of like a surprise to me. I'm like, wow, right? I'm just like, Jesus, like look at the size of these, right? And it's really fun because you don't even need anything else on your charts. You just need to use the scanner, pick your time frame, and know how to reduce the risk if you're trading smaller time frames or even bigger time frames. Right? They do not repaint. Like they stay on the charts. No, they don't back paint. Like they're there, right? Like these are all based off math, right? So once they're there, once a target is hit, okay, once a target is hit, and after a certain number of bars, it'll come out of the scanner, right? So after a certain number of, we are live, Henry. Yes, we are live, brother. Yeah. Yeah. When do you get the frequency pattern confirmation? Well, all of these are because they're still in play, or they haven't hit. Like there's two ratios here. That's why this is. It actually looks like one ratio, but it's actually two. Do you see how there's two stop losses here? It just so happens to be that both those patterns actually overlapped. There was double pattern recognition. The reason for this, take a look at this dotted line. See how it's still dotted? That means that pattern is still in play. So that's an RRW4. So let me just kind of simplify this down. Let's go and turn off all the bulls for a second. Show long ratios off, recalculate. Okay. Now what I'm going to do is I'm just going to go and I'm going to turn these other ratios off for a second. Let's go in here and all these are, let's just do, let's turn them all off for a second. And that's an RRW4. So RRW4 is still in play right now. So let's do this, RRW4 right there. That's the ratio that's still in play. That's why the scanner is still showing that. Right? And like we're talking, these are big trades, right? Like take a look at how big those are. Right? Like And what's really powerful about this is swing trading, right? So it's a lot more passive, but the scanner does the work for you. You can go in and assess the risk. One of the things that I wanted to talk about, do you remember when I said, how do I increase the probability of these trades? One of the things that I talked about here was I said, wait for confirmation at the entry point. So we talked about reducing risk and refining the entry. So that's something that we talked about already on probability, on how to use volume to help with that. And then the next one, it says trade ratios in the direction of the higher time frame trend. Well, we didn't look at that quite per se, but we did look at the direction. So we covered that. So you need to know if you're going counter trend or if you're with the direction. But the last thing I want to talk about is, how do I identify confirmation of an entry point? And one of the things that I really think about is this. One of the things I really think about is if I'm coming up into this area, and I'm thinking like as a new trader, and I'm seeing the ratio will start plotting here, and then I've got this area right here. So wait for it. Watch this is what I would be doing here. If I was planning on taking this trade right at this area, I'd be tracking the low price. As soon as price broke the low price, that would be my cue to get into the trade. See, now I would track the next low price. Okay. And I would wait for price to break it. See the low price is there? Wait for it. Right there. That would be my trigger for my short. I would wait for price to break the lows of those candles. That would be my cue that the market's starting to sell off. It is, no, confirm patterns are only confirmed when they hit the stop or target. This is still a potential trade. It always stays potential. It always stays potential until either the stop has been triggered or the target has been triggered, because it's always still in play. The ratio is still in play until a stop is hit or a target is hit. And that's why the scanner still shows it in the scanner. Okay. I just want you guys to understand that. And then they come up and they retest the entry, and then they go down. So that to me was very close to the target. And you know, at that point of the game, you got to ask yourself, are you going to take a little bit off, or are you going to move your, you know what I mean? That's a pretty big move, right? So, and that's the thing for me is it's fun for me to look at this. I can take a look here, frequencies. Yeah. So let's go turn these other ratios back on. Right there. Now we can put them all back on. But that's why this one, see these targets right here? These targets right here is was actually from this ratio. This ratio came in here, boom, 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 reversal ratio, boom. This one is still in play, this big ratio, because we have the ability to turn big and small ratios on and off in the software. And well, it's all automated, Monica. It's all automated. You don't have to do anything. It's all automatic. You just need to wait for the software to tell you the scanners are there. You identify the markets you want to trade them on, and you plan your risk tolerance. And that's the whole point. It's heavy lifting done for you. And it doesn't need to be difficult. Let's go take a different market. This is on the 120. The Euro Swiss franc is there. Let's go to the Aussie dollar on the 120. Aussie dollar. I don't have long ratios on, that's why. Yeah, this is the Aussie dollar on the 120. It's there. You don't have to do anything. Like everything is done for you, right? And that's the turnkey part of this, is that if you're really looking to make it super simple, whether you're trading stocks, futures, forex, day trading, or swing trading, it's all in the scanners. You can, if we go and take a look at this, you want to look at the FDAX? I don't know if I have data for the FDAX there, Prince. I really don't, brother. Everything is set up for you, Erwin. So like this workspace comes pre-configured. I have these with our users. We can give them to you. We install everything. My installation team can set it up for you, so you can build this workspace, or you can add the software to other workspaces, right? All of these scanners are built for you, so you don't have to do it. We've got 30, 60, 120, and 240 for the swing, and then I've got 1 to 5 minute on the day trading scanners. And if we take a look, like I want to go and take a look at the 60-minute charts for a second. So let's bring this over to the 60-minute. Let's just take a look at some of these 60 minutes. So let's put this to 180 days, and let's put this to the 60-minute charts. And now let's go scan all the 60-minute patterns. So let's take a look here at the Aussie dollar is at a 60-minute. So they've overshot this a little bit, but now they're coming back up. And I think there's potential in this trade because they're breaking structure and they're taking out the highs. So I do think there's potential on this trade for a long. Let's go take a look at the euro dollar on the 60-minute. Take a look. This is the euro dollar. This trade is in play. Like, this is actually a live trade right now that's consolidating on the entry point. And what would really be a good cue for an entry, this was a good cue for an entry here. What will really be a good cue is if they take out this consolidation. If they can take out that consolidation, that is a very, very strong cue for this trade to hit targets. Okay. You notice how I don't have anything else on the chart? One thing you can do, like realistically, to really add value here, and this doesn't even cost you money. I'm trying to teach you how to increase probability so you can understand how to see things before they happen. Just go down and add up volume, down volume to your chart. You want to see something what's really important here? What I really see that's valuable? Yeah, remember this. If you're not a swing trader, just apply this to day trading. I already covered all the day trading stuff. If you want to use day trading, it's all relevant to you, right? But I'm just explaining this across all aspects. So if you take a look at this trade environment here, right? There's the entry, but what do you see here is big volume stepping in. That is a big sign on a very small candle, which means that's big money stepping in at this level. At this ratio is a key point for this to be planned out. But what's more important is that as the selling volume started, it was dropping. And as they're taking out the highs of this candle right here on the entry, volume is building. They're loading up here. On the 60-minute, there's a very good chance this trade is going to the target. Now, if you wanted to do that, let's say on the day trading charts, let me show you an example on the day trading charts. So let's open up the day trading workspace again, and we'll do it on a smaller time frame so you guys can see this. And we'll load it. Okay? Because not everybody's swing trading, but do you guys like that? You guys see the power in that? Pretty powerful stuff. When you can let the scanners do all the work for you, and you can just go and look at your markets. So I'm going to just add volume onto this chart. I really think volume is a very big component to success in understanding what's about to happen before it happens. When you can see the volume building on your chart, watch this. So let's go in here and take a look at the YM here for a second. The YM, it had the scan here, okay? And I want you to pay attention to what was taking place at this trade. This is a day trade counter trend, okay? I want you to understand something here. You can see right now going into this chart right now on the 5-minute on the YM that the volume was less than the buy volume going into it. Okay. So even though price is dropping here, it's dropping on less volume on the sell side. So to me, that is a sign of weakness, right? And take a look as the market's coming down, look at the volume, the down volume is dropping. So to me, that tells me that this is, right, that this is very high risk, right? Very high risk. If we go into the NQ here, remember how we talked about waiting for the market to come up to our area? This is a trade plan. We talked about this still in play right now. I'd be actually like look at the buy volume in here. I would be waiting for price to come deeper into this area. I don't think that this market, it very well could. It could where it hit the target and this trade's over. You don't get the entry. You're too risk adverse. But the point of the matter is that I would look at using volume analysis to study what happens when we get up here, because that's an area of interest for us. This trade is in play on the NASDAQ on the 5-minute. So as this market comes up into this area, I really think the key here is to watch what happens when we get up into this area and look at the volume, because it's going to be a tall tale sign. Okay. So did you guys learn something from this? What do you think? Pretty interesting stuff. You can use the scanners. So let's recap the strategy roadmap. Step one is we use the scanner to locate the trades on the time frame and on the market that you want to trade them on. Then define the direction. Are you going with the trend or against it, which will help you understand how to be aggressive with risk or not. The trade plan is all done automatically for you, so you don't need to worry about it. You just need to look at the plan and get into the market. And the odds enhancer is about reducing risk using volume and then understanding, the trigger on a granting, right? And it's all automatic. You just load the workspace and you can scan your markets. Super efficient, very turnkey.